Now, if you've been holding on to the SPYI US Dividend Equity ETF SCHD like I have for several years now, and if you're a dividend investor, you'd probably be lying if you said that you haven't considered selling your entire position of SCHD and dumping it into something maybe better, especially because this ETF's performance year to date has been horrible. The SPYI US Dividend Equity ETF year to date, as far as price performance goes, it's down. It's in the red. It's down around 1%. And this is all while the entire market, pretty much anything you throw a dart at, year to date has been up in the green significantly. So in this video, I want to share with you guys my plan moving forward with my around 2,600 shares of SCHD, around a $70,000 position I have as of right now. I'm going to share with you guys all the thoughts I've been having as of recently on where to potentially move this money into to earn a lot more income and even some potential upside. So if this sort of thing interests you at all, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. Now I've made so many videos in the past talking about why I love SCHD and why this ETF is amazing, and I still do think there's plenty of different metrics within SCHD that do potentially make it a great long-term holding. But one of the main problems with SCHD is obviously going to be the holdings. This ETF holds on to around 100 individual stocks, names like AbbVie, Cisco, Merck, Amgen, PepsiCo, Coca-Cola, names that historically have done pretty decent, but for whatever reason this year, or at least year to date, are not getting the love they deserve. Now also a lot of investors are saying that energy is going to come around later on this year and into next year, which could potentially make SCHD do very, very well. But it's not only the holdings I'm a little bit worried about when it comes to SCHD. If you look at this ETF's dividend growth rate in the last 10 years, we're talking around 10.4% dividend growth, which is outstanding. But some of the problems are starting to show if you look at different dividend growth rate metrics. Looking at the trailing 12-month dividend growth rate, 5.79%, the last 3 years, 7.77%. Now, even though neither one of those are necessarily bad dividend growth rates, I'm still a little bit concerned that long-term, this ETF is going to be able to offer us double-digit dividend growth rate percentages over the next 10, 20 years. Because even though in the max time frame, this ETF has offered massive dividend growth, again, 10, 11%, which is outstanding, and in my opinion, definitely a reason in itself to hold on to something like this. The dividend growth in the future does still worry about me, which is why I've been saying for several years now that this ETF better keep growing their dividend. Otherwise, I think a lot of investors, including myself, are not going to be happy. Now, also, I was talking to some dividend investors recently and talking about the fact that SCHD has not been doing great, of course. I think we all know that. And throwing around the idea of taking that $70,000 that I currently have in SCHD and buying something like SPYI, the S&P 500 high income ETF, or of course the NASDAQ 100 high income ETF from NEOS, two great tried and true ETFs that I already own a ton of. But these ETFs have not only grown a little bit over the max time frame, they offer around 12% yield and 14% yield respectively. Now that means that even if the S&P 500 and or the NASDAQ trade mostly sideways, these ETFs are still going to be able to offer a ton in distributions because, of course, they're exposed to high beta indexes. And just for fun, I plugged in some of the numbers. My $70,000 investment into SCHD at a 3.8% yield currently pays me around $670 per quarter, or around $2,700 per year in dividends, which isn't the best, not the worst. But what's crazy is that if I put that money into SPYI, which I think is a relatively safe investment, SPYI offers S&P 500 exposure. The S&P 500 is pretty tried and true in my eyes, 12.2% yield, $8,500 per year, which is a ton more income than I'd be earning from SCHD. Now that's around $500 more per month in my pocket by buying something that's also relatively safe. Not to mention if I move that money into the NEOS NASDAQ 100 high income ETF with the 14.3% yield, we're talking $10,000 per year, or around $836 per month, over $600 more per month, again from a relatively safe ETF in my personal opinion. So where do we go from here? I've always thought of SHD as sort of an asset that I would never sell, and I still really don't think I'm going to, but it is very, very tempting to move money from this ETF, which I currently have, again, around $70,000 worth, into something that's going to maybe grow, offer a little bit higher beta exposure in the underlying, and offer a ton more income from day one. Now, the first step with SHD happened in my portfolio earlier this year. Instead of buying a ton more of this ETF like I was doing for a while, I really slowed down my purchasing with SHD. I think I still maybe buy $5, $10, $15 per day on one of my smaller portfolios. It's set up to auto invest, but I have 100% not went in and bought more of this ETF in a very, very long time. Especially because these days there's so many great high income ETFs across the market. Again, some of them are better than others. I get it. There's also a lot of junk out there you have to be aware of. But with all the high income ETFs to choose from, it is starting to be very tough to justify holding onto something like SHD. But I want to hear what you guys think down below. When it comes to my $70,000 position that I currently have of SHD, do you guys think I should hold on to it? Should I sell it? Let me know your honest thoughts down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you in the next one. Thanks as always for stopping by. And if you are interested in investing, make sure to check out these recent videos I posted right here.